the Audit Chapter 4, it is about the audit risk, materiality, and sampling. In this chapter, I will explain on the risk, materiality, and sampling in audit. For your information, in the concept of audit risk and materiality, both are significant fundamental concepts in planning and designing the audit approach. The concept of audit risk and materiality, what it is. Materiality can be defined as information which is material if its omission or misstatement could influence the economic decisions of users taken on the basis of the financial statements. Materiality depends on the size of the item or the error judged in the particular circumstances of its omission or misstatement. Thus, materiality provides a threshold or cut-off point rather than being a primary qualitative characteristic which information must have if it is to be useful. This is defined in ISA 320. Which is the assessment of what is material is a matter of professional judgment, as there are no specific rules or standard is provided in determining materiality. I repeat, professional judgment. In materiality, there are two bases that auditors use for evaluating materiality. The first one is quantitative base, which is using percentage, while the other is qualitative factors to adjust the lower quantitative amount. In quantitative base, it is about 3 to 5% of total assets, total revenue, income before taxes, income from continuing operation, gross profit, and also 3 years average of income before taxes. As for the qualitative factors, this includes the first year engagement, control weaknesses, management turnover, higher market pressures, high fraud risk, and also higher than normal risk of bankruptcy. And now we proceed to audit risk. It is the risk the auditor expresses as an inappropriate audit opinion when the financial statements are materially misstated. As you all know, risks exist, but they are difficult to measure and require careful thought to respond. It cannot be eliminated by auditors due to inherent limitations, which are the use of testings. Second one is the inherent limitations of internal control, and lastly is the audit evidence is persuasive rather than conclusive. So this is the audit risk model. It can be defined as AR audit risk equal to inherent risk times with control risk times with detection risk. Inherent risk is when the auditors assess the expectation of material misstatement before considering the internal control. As for control risk, the auditor's assessment, it is the auditor's assessment of effectiveness of internal control to prevent the material misstatement. And for the detection risk is when the auditors fail to detect material misstatement. The assess is using the sampling and non-sampling method. I will explain more on audit risk model. In inherent risk, there are two levels. The first is financial statement level or entity level, and the other is account and transaction level. In financial statement, there are two main points which is affecting the industry and also initial versus repeat engagement. And as for transaction level, there are results of previous audit, related party, non-routine transaction, and also judgment is required to correctly record account, balance, and transaction. And as for control risk, there are two levels too. The first is general and the other is specific. As for general, it is the attitude of management towards the important control system. The specific is when the existing control procedures is good enough to prevent and detect errors or not. And as for detection risk, the detection risk has an inverse relationship to audit risk which is the IR and CR. So basically, this is the audit risk model. Let's see, with audit risk AR plus with materiality M. Thus, what are their relationship? Let me tell you. Their relationship is inverse. For example, when materiality decrease, the AR, which is the audit risk, increase.
Next is analytical review procedures. Analytical review procedures mean evaluations of financial information made by a study of plausible relationship among both financial and non-financial data, defined by ISA 520. The purpose of analytical review is a risk assessment procedure to obtain an understanding of the entity and its environment. Secondly is a substantive procedure when their use can be more effective and efficient than pace of details in reducing the risk of material misstatement at the assertions level to an acceptability low level. Number 3, as an overall review to financial statement at the beginning and the end of audit. And last, to gather substantive evidence for detecting misstatement end of the audit. Next is audit sampling. Sampling involves the applications of audit procedure to less than 100% of items within an account's balance or class of transaction, such that all sampling units have an equal chance of selections. This is defined by ISA 530. It is include express opinion in audit report, and audit sampling can be varied between each audit firm practice. Next will be type of sampling risk. There is type of sampling risk which is sampling risk and non-sampling risk. Sampling risk is possibility that the sample drawn is not representative of the whole population, resulting the auditor reaching an erroneous opinion. In the sampling test or test on control, whereby the auditor will be conclude that the list is higher than its actual, and inversely. There are two types of risk, whereby risk of assessing control risk too high and risk of assessing control risk too low. Another undersampling risk is substantive test, Substantive test is whereby auditor might conclude that there is material error when in fact there is none, and same inversely. There is type of the risk the auditor will conclude there is material error, in fact it does not exist, and same way around. Another type of sampling risk is non-sampling risk, whereby the possibility that the auditor may use inappropriate audit procedure. In case of non-mathematic measure, it failed to detect misstatement. And now we move to methods of audit sampling. There is two types of method of audit sampling, whereby it is statistical approach and non-statistical approach, or NSA. Statistical approach based on random selection sample. It is evaluate result by using probability theory. Meanwhile, non-statistical approach, it is professional judgment and quantitative analysis. It is based on selecting item for useful informations. The advantage of using this method for SA is aid in design of an efficient sample. Meanwhile, non-statistical approach more simple, less cost, and save time. But in statistical approach, it is measure the sufficiency and quantified sampling risk. There also a disadvantage by using statistical. It is training cost in sampling technique beside cost in designing and constructing the sampling applications. In NSA, it is not as effective as statistical sampling because of training difficulty, absent inconsistency, and potential digitation problem. Besides, evaluate sampling risk may be incorrect. Besides that, for altitude sampling, in the categories, it is to estimate the proportions of population that pose a specific characteristic. In the term of statistical approach, monetary unit sampling and monetary and classical variable sampling. However, under non-statistical sampling, attribute, monetary, classical variable are not exist. And now we look at similarity of statistical approach and non-statistical approach. The first similarities is based on steps. First one, it is similarity step based on evaluating the sample result. It is all sampling units in the population have chance of selections. Besides that, it's performing the audit procedure whereby audit objectives must be met. Besides that, selections the sample. In other words, all sampling units in the population have chance of selection. Last but not least, design of sample, whereby audit tests are performed to be desired sampling risk and to minimize sampling error. Another similarities of this statistical approach and non-statistical approach is method of sample selections. First one is use computerized random number generator through CATAs or random number tables. Besides that, both are similar, and the method sample selection is systematic sampling, whereby sampling interval is determined by dividing the physical population by the sample size. It also starting number is selected the first interval, and then every nth item is selected used in both statistical and non-statistical sampling. Third is haphazard selections. It useful for non-statistical sampling, Besides, sampling units are selected without any conscious bias. The third similarity of A is A and N is A is sample size selection. Firstly, the sample size selection of the similarity because of sample size is affected by the level of sampling risk that the auditor is willing to accept. Besides that, another similarity under sample size selection is the lower the risk the auditor is willing to accept, the greater the sample size will need to be.